All right, Brendan. So Meta just, of course, announced a killer earnings report.
Yes, they
Their
did.
revenue came out to 59.89 billion, beating estimates of 58.5, which is a 24% year over year increase, which is insane for a 1.6, 1.7 trillion dollar company.
Yeah.
Their EPS, their earnings, by the way, this is Meta, who just 3 months ago was selling off 15, 17%, something along those lines,
The
because
dog days.
people were worried about capex. Well, their EPS is absolutely killer at
Yep.
$8.88, beating analyst estimates of $8.21, which is what, 5 to 7% beat on EPS
Yeah, and 11% year over year,
with
compared to,
increasing capex.
yeah, with increasing capex. Yeah.
I mean, absolutely nutty. So the company continues to demonstrate efficiency in its core business, even as it ramps up spending. So what are your initial thoughts with this earnings report? Were we right? Do you think that we're going to continue to be right?
So I think, as we discussed last week, I think we were kind of expecting this. We were pretty confident. I think, something we spoke about privately before we started, something I'd like to mention first is their ad impressions, right? Ad impressions grow 18% Q4. And I think that signals that while they're increasing their capex, which investors seem to be comfortable with, right? They're increasing their capex. They're really cementing themselves. They want to be a player in the AI field, but they're not getting away from their core business. And for me, I think that's something I can appreciate because we all like some risk, but you can't lose yourself in that. Especially if you're starting to divert resources. So I like to see that their core business is growing. I like to see that they're still getting stronger there while also veering off into these down these other avenues. Now, here's the thing. I don't want to make it, and I think, this is a duty we both have. We can't make it seem like it's all good, right? I know Reality
Right.
Labs is still a problem. CapEx is going up, which arguably some people may look, I personally don't think it's a problem, but I guess the impression there is, okay, your CapEx is growing. We know, I mean, you said in the press release that you're doing data centers and you're doing AI, right? So I guess the concern there is, okay, if we're given that 100 billion and the returns are not what we expected, or they're, I think then there's a problem. Um, I also think I don't want to misspeak here. Um, I do believe so. Operating income was down a little bit. Um, there was an increase in daily active people, 3.58 billion, 7% year over year growth.
How many people are on the face of the planet, by the way?
Eight.
8 billion. So you're talking almost 40 to 50% of the world's population uses Meta products in some capacity.
In some capacity. And and I don't I believe that's for their family, that's for their family of apps, including
Yeah,
WhatsApp,
WhatsApp. Right.
Instagram, Facebook. Um, but I like this. I mean, even look at expenses, right? Expenses, 40%, right? So yeah, you see it outpaces revenue growth, but I think especially in, the earlier stages of a period of like innovation or growth, I think you're going to have that. I think you're going to have expenses outpacing revenue growth because you haven't yet found a way to truly maximize the value out of whatever you're doing. So I like it. I mean, but what are you feeling? What are your thoughts?
I think this is a killer quarter, but I'm honestly a little bit surprised by the price reaction from all this. I mean,
Oh,
we talked about this 3 months ago with Meta's earnings, where all of a sudden they say, "Hey, we're gonna basically increase our capex," and everybody just flips out. Why? Because maybe they had a. I mean, I highly doubt it, but is it because they had that one-time tax expense?
well, the big beautiful bill was, I mean, it was big, right? Because it turned their effective tax rate, I believe, from 17% to 30%, which is huge.
No, it was higher than that. It was
Oh, it was?
Well, for the quarter, it was like 80% or something like that. It was really high. But
Oh, I
they
think I think I'm saying for the year.
oh, for the year. Well, yeah.
Yeah. So like, I mean, yeah, in the quarter, it pretty much ate up all the money they made.
But it's not hard to understand what that's doing, right? It's a tax bill. It's not like they got sued for 500 billion or something like that, right?
Cambridge
It's a
Analytica.
tax bill. They're
Yeah.
not going to owe more than they need to owe, right?
No,
And
no.
and so the price reaction last time was because, oh my gosh, we're increasing capex and there's no end in sight. But now, and I'm not really sure about this. Maybe I'm just not digesting it properly. But all of a sudden, so I'm reading here off of a Business Insider article.
And we could drop the link.
Uh, yeah, the company said it expects capital expenditures in 2026 to land between 115 billion and 135 billion, almost double the 72 billion it spent in 2025.
Yeah.
That's insane.
Huh.
And the stock went up. Well, for a moment there, it was up 10% after hours.
Yeah, it hit like 741, which was, I mean,
What? So everybody's scared about Meta's increasing capex. They say, hey, by the way, you know that 113 billion you guys were expecting? We're actually going to spend 115 to 135, probably on the higher end of that, if we're being honest with ourselves, right? If we had to guess, it's probably going to be closer to 135 billion, and maybe it'll be even raised. Those expectations will be raised in Q2 or the next quarter, or whatever it is. But I, it's kind of mind-boggling to me. Okay, hey, let's sell off when they say they're going to increase capex, but now they say the exact same thing, and then the stock goes up 10%. The only thing, and we sort of mentioned this last time, the only thing that I think that could possibly have done this is Mark Zuckerberg is giving us a little bit of a more clear picture on exactly, number one, why are they building out so much infrastructure? Like we know that they're developing Llama. We know that they're developing. I think there's a new LLM replacing Llama. I think it's called Avocado, if I'm not mistaken.
mhm.
They're also using AI to improve their ad business, but I don't know. I feel like we kind of already knew all of this.
I, okay, so I think my understanding of the situation is you have that crazy tax bill, that one-time tax bill. So that there's going to be a sticker shock there, right? You're bringing earnings per share down from I think it was like from $6 a share to $1, right?
Yeah, it was
I
significant.
there's initial sticker shock,
Still profitable though.
still profitable, which that says its own thing. But I
Oh yeah.
also think um so when you look at a company like Facebook saying, you know what, we're gonna start investing in data center. We have to build our own. I think I think maybe to me that signals that the cost to use like third-party cloud services is outpacing the return they're getting on training their models, right? So like I take this as we're going to start investing in hard physical assets so we can kind of push this forward and continue our growth. So, um, you know, I don't know. I think this is a move from Facebook to try to kind of I don't want to say isolate themselves, but poise themselves to be fully kind of self-sufficient. Like their own
So
stuff.
actually, that's a perfect segue because there's this quote that I wanted to read from this article. Okay, this is from the earnings transcript. When Wells Fargo analyst, and excuse me, I'm going to mispronounce the name. Wells Fargo analyst Ken, I'm not even going to try to pronounce his last name, asked
Shout out to
how
Ken.
critical it is for Meta to have a general purpose model. Zuckerberg leaned into Meta's identity as a deep technology company. What allows Meta to build everything it does, he said, quote, is that we build and control the underlying technology, end quote. That way, Meta can design the experience it wants and not just be constrained to what others in the ecosystem are building or allow us to build, Zuckerberg added. So he's basically suggesting that relying on these outside models could become risky over time. and that creates, I suppose, competitive and safety risks to what Meta is trying to do. So Zuckerberg is almost making the case that it is essential for Meta to have its own models from a business perspective because Meta wants to actually design and build the experiences that they're giving people for their family of apps and even with their Meta glasses.
I also think it's there's an argument to be made about where the dollar's going, right? You right now, when you do not have a developed ecosystem in a sense where kind of every part of the process can be taken care of, you're spending money, right? You have to go outside. And I think that when you spend money on research and development and you spend money on building, you know, data centers or acquiring property and trying to add to your balance sheet, um, I think over time you're just building equity, right? Like you said from the article you just quoted, that there's a little bit of kind of trepidation of relying on the space as a whole and all the participants. So it doesn't really surprise me, and I do think if you just look at Facebook or Meta, excuse me, and what they've been, this is kind of their MO, right? They are going to continue to expand on their IP so much so where they become the industry standard, even though they're not the industry standard right now.
Okay. This is really interesting because while you were talking about
Mm.
that, I had a thought. And my
Sure.
thought is, what if there is genuine cost savings to this? And I think you just mentioned this, but I was like, how much cost savings are we talking about? If they're building their own models, they're building their own infrastructures. I mean, how it's super expensive to build these data centers. But here's the thing: we have Oracle, we have
AWS.
AWS, we have Google Cloud, right, and
Yeah.
Azure. They're profitable, so therefore there's a profit margin. So that means if Meta can build their own data centers from scratch, they save the profit margin. So I'm looking at this. It says that Oracle's initial profit margins are between 14 and 16% on their AI business. So they're at least saving 14 to 16%,
Yeah.
which is interesting. It says if Meta were to rent this capacity from a provider like AWS, Azure, or Google Cloud instead of building it, it would likely cost 30 to 50% higher, potentially costing them an additional 40 to 60 billion annually on top of the 135 billion they're already spending.
Yeah, so this is the main argument there, right? Where you are going, Facebook, Meta they're going to buy the house instead of renting it because I
Yeah,
think they've realized that they rather have equity in their pocket, right? IP on their balance sheet, tangible assets, and they don't have to rely on anyone. I think another thing is, and this isn't so much of a huge thing because it doesn't really happen that often, but you know look at it. There's an inherent risk with using third-party providers just because they may have some sort of data breach, right? There may be something with their system that is going to impact your business, right? And I guess the
right.
argument against that is, well, when you're concentrating it all to yourself, if you mess up, it's the same kind of thing. But I think the argument is there of, are you losing money when you're spending it on research and development that we know because of other companies is profitable?
It's extremely profitable.
It's extreme.
Yeah.
So why not? Like, why, if you have the cash, why not?
I'm not going to lie. I feel like I should have looked this up a year ago,
Mm.
and I'm not sure why I didn't. And I'm not sure why I've never thought about this, but this is genius.
Yeah.
Like they were in a boardroom one day and they're like, wait a second, wait a second, wait a second. What if we built our own data centers
Yeah.
and we saved the profit margin?
Yeah. Like, why don't we just take it for
And
ourselves?
it helps us with taxes.
And here's the other thing is this, right? We don't know because this is information that would be internal. We don't know what their current limitations are based on the services and products they're using. And we don't know what kind of heights they'll get to when developing these things are in-house, right? And it could be a fully controlled a process.
Yeah.
But it's
I
a good idea. There's nothing wrong with it. They're good.
what are people tweaking out about? Wait, this changes my this just adds to my whole thesis.
People are upset. People are always
Meta is making money moves. They're literally a money printing machine. They just got hit with a how big was that tax bill? They were still
16
profitable that
bill.
quarter.
16 billion. Imagine this. Imagine this. Imagine you pay like 80% of the amount of money you made this quarter into tax. You pay it to Uncle Sam. He needs some money. You turn around, you look at your bank account. You still made money. You still made money after Uncle Sam and all of his little friends came and put their hands in the cookie jar. Didn't even know you had a whole thing in the oven.
And
Meta's
what's
smart.
amazing too is that they get to optimize their data centers, right? So they can have custom silicon that optimize their workflows, optimizes computing so that they can get stuff done faster.
Yeah.
And their core business is growing 24% a year.
I love it.
Why do I have an issue? Why does anybody have an issue with this?
Um, I really don't know.
Brendan, a 1 point, I guess 7 after hours, $1.7 trillion company, $1.7 trillion company is growing at 24% a year.
Here's the thing, and I told you this earlier this week. Maybe people are scared because trees won't grow all the way up to the sky. Okay? And the question you have to ask yourself is what happens next? Right? Are you gonna grow? Do we get to 10 trillion? Do we get to 100 trillion?
I think we get to at least 2.
Do we get but that's what I'm saying, right? Like investor
Sure.
expectations are, I mean, they're so hard, right? You can make 100 billion and next quarter they'll be mad that you didn't make 101 billion.
Dude, do you know what Google is expected to grow at?
I don't know.
Would
50.
you think above or below 20%?
I mean,
Based on the current valuation of Google, above and below or below
I mean, I
20%.
would think below 20%.
Yeah, it's expected to grow 17% year over
17%.
year. 17% year over year. Ish. Plus or minus 2 points.
And how much if hmm.
Keep in mind, Google is trading at a forward PE of 31.
What's Meta's PE right now?
Meta's PE is 29.
Not anymore.
Their forward PE is a 23 as of close today.
My question, and this is something that nobody's talking about, I haven't seen it. When do we do a stock split? When could we get some cheap little metas?
3 years.
Let's
Cross.
dilute
I think it'll cross 1,000. I think
let's
it crosses 1,000 and they'll do it.
let's dilute these shares a little bit. Um,
I wouldn't mind cheaper option prices. That's for sure.
issue a billion. But you know what? Here's the
We'll
thing.
we'll, we'll talk we'll talk percentages if you want to talk about that.
I mean, I don't know. I'm always against it because I'm not one to to brag. Look, here's the thing. We had call options for Meta.
Brendan and I opened a position before earnings, and I've actually had a position probably since I want to say the start of December.
Yeah, I opened mine a little later.
Yeah, and I think together we're up. What percentage did we measure out?
Um,
What was the percentage over the last couple months
oh man.
on Meta?
Oh man. All right, but it
It
doesn't
was 100 and what percent?
it's a little more than 150% return.
150%. All right, we'll
But
take it.
okay, but first of all, we're not investing professionals. We don't give you investing advice. This is,
And keep in mind, especially Brendan has a lot more experience with this than I do, because he's been trading options for many more years than I have.
well,
But Brendan is a meta trading expert, right? I mean, you know this stock like the back of your hand.
I appreciate that. I appreciate that.
Yeah.
And I will say this. I have been wrong. And I think we said it in the
Oh, we have been wrong. Yes.
we have been wrong, right? So we don't ever want to give the impression that we're like omniscient or like we have these we get it wrong sometimes. But yeah,
But
but this one we
I
did it.
think what's really important about the positions that we take is we have a really good fundamental understanding of what's going on with the company.
Yeah.
Meta has been severely undervalued. You and I have identified that very clearly, right? The 15-17% sell off that we just saw. I mean, Meta dipped below $600
Yeah, they were
after their, not this quarter, but the previous quarter. They were under $600.
yeah,
It was nuts.
579. They hit a low of five. Yeah, it looks like 579 here. Oh, 580 and 29
Yeah.
cents.
And so I opened my position probably a week or two after that. And when you look at a company that is organically growing at 24%, it's slapping you in the face. You have to take some sort of position on it.
Yeah.
I mean, this is such a quality company. Time and time again, we see Meta exceeding expectations. They're growing faster than we think that they can. They continue to dominate people's everyday lives. Like, look at how many users they have. There is a point to all this. There is real strength. There is a real moat in having what was it, almost 3.5
3.8.
billion.
Yeah.
It is 3.58 billion.
3.58. Okay, so that's where I got the
3.58 billion.
yeah.
Yeah.
Yeah, yeah.
That
So
is, it's insane. So you have an outstanding company that can afford to spend $135 billion on its infrastructure. It's growing at 24% a year despite being a $1.7 trillion company. It has outstanding margins. Its PE is only a 22, 23 forward.
they have a massive war chest, 81.5 billion in cash and
They
cash
have,
equivalents.
oh my, over 80 billion in cash, really?
Yeah, they increased their debt. They leveraged up. I think this quarter, I don't want to I know they're expensive. Yeah, yeah. So their long-term debt, it looked like it doubled. Um, but I mean they're still sitting on a massive war chest. They didn't
Not
have
to
any,
mention,
mhm.
not even mentioning, dude, all the recruitment they've been doing over the past year of these AI giants. I mean,
Yeah.
massive pay packages, but oh my gosh. Oh, wait. I mean, this is a perfect time to bring this point in, Brendan, about the efficiency. But we were
Oh,
reading an article earlier. Okay. Meta has seen a 30% increase in output per engineer.
what's happening in Meta's
30%.
there has to be something here. I think they're like they're tube feeding them Adderall. How do you get 30%? You know what happens? That's what happens when you give somebody $1 million to get out of bed. Those pay packages, let me tell you something. For those pay packages, I would have a 100% more efficient rate. Like, I mean, crazy numbers.
Bro, hold on. I didn't even read you the second part of the sentence. According to the article, power users of its internal AI coding tools saw output rise 80% year over year.
I hope
One person who is coding is producing 80%, almost two times the amount that they were producing a year ago.
it's you know why? Because they're making equity. They are creating more value. And a lot of these right? Like, we're talking about a lot of these super, these teams, right? Like, let's not get it twisted. A lot of these people have equity, right? It is within their
Oh
best
yeah,
interests to like have a generational lock-in at what could be one of the most pivotal points in, human history is the AI boom, right? No matter what happens, things will be different after this period is over. Like
absolutely.
technology will change, whether it crashes, whether things are going to be different. So yeah, 80%. I mean, I just hope they're okay. I hope they're getting sleep. You know.
With these AI tools, I bet they are.
Oh yeah. Oh yeah.
Probably more than they used to.
Oh yeah. Honestly,
That 20% from that 20% missing from the full double of productivity is
is
probably going toward their sleep.
yeah. Honestly,
That's a win-win. Now, okay, so we've identified that Meta was undervalued. We
yep.
saw that it was at a great valuation. We see that it has great revenue growth. It has a great underlying business. It's extremely strong. It's saving money on data, on building its own data center so that it doesn't have to pay the premium of hiring somebody else to essentially rent out their data center space. Now, here's the last thing that I'll touch on. This is something that Zuckerberg said during the earnings call. He said, for the next couple of years, ads are going to be by far the most important driver of growth in our business. Zuckerberg said, and he added that Meta is working on new bets alongside that core engine. Now, I want to talk about the new bets because we've already talked so much about this, the core business.
Yeah.
They are making their goal is personalized AI, right? Zuckerberg has been laying out this plan. I think this is partially why the stock popped after hours because of all this, despite the massive capex involved. Zuckerberg's dream is everybody has their own personalized AI within their family of apps. And I think we can extend that also to Meta glasses, which by the way,
Let's talk about
I
that.
don't have, yeah, I don't think I have this pulled up, but I read somewhere that I think Meta's AI glasses, their sales have tripled year over year. I think they're up 200%. All right, I'm looking at Market Watch right now, and it says that smart glasses are the new thing, and sales of Meta's glasses have more than tripled in 2025. Which kind of makes sense. Like we said last time, right? We
Yeah.
see everybody with these glasses
Yeah. Yeah.
all over Instagram. Influencers are using them all the time, especially for prank videos. I see people walking around in supermarkets.
With them. Yeah.
Yeah, terrorizing old people. I don't know if that's ethical, but they're doing it and they're wearing the glasses. That's all I care about. But
Yeah.
now that we're looking at this personalized AI, once you're able to integrate those and directly into the glasses, I genuinely think it's going to be similar to the new iPhone.
I'm, I think AI in terms of like the space, I think it'll be interesting to see how everything plays out. We already have examples of a suite of products, right? You see it with Microsoft, you see it with Meta, and I think, at least to my knowledge, Meta's kind of the first one to say, no, we're not talking about broad stroke LLMs that you can just log in. Like, we're talking about something personal that is integrated into our suite of apps that works with you and your profile on an individual basis, as opposed to um, basically, the open web of AI that exists right now.
Right.
And I think that's going to be really cool to see. And I wonder how far that goes, right? Where does that end? And think of, I'm thinking of other things like, how we have like those medical bracelets and stuff like that, right? What, will we one day have AI powered like medical devices such as like a pacemaker, or like like the thing that diabetics have, where it'll tell you if your levels are low, and you like this,
Yeah.
I think, this is the foundation of that, I think.
Oh, absolutely. So we remember, was it 2 years ago, 3 years ago, when Apple and Meta both came out with their VR headsets that you could
Yep.
wear? Yeah, which is cool. It's
Yeah.
cool, but it's just not realistic. Why,
No,
why do I want to wear that in public? It's
yeah.
stupid. I look like a dork.
Yeah.
And I'm sure it's heavy on your head. It's just, it doesn't, the design of
It's
it and the
funky.
concept of it, it just doesn't mesh with reality.
Yeah.
But this, and
Yeah.
maybe this is a play on Meta Reality Labs, but this is reality. People wear glasses every day.
Yeah. I mean, look at me.
And hey, what if my glasses were smart? Okay, I pay how much for a pair of glasses, Brendan? How much does a normal person pay? Maybe
Couple,
300, 400?
yeah, depending on what your insurance is, a couple $100. Yeah.
Guess what? These are $799. And they come with AI, and who knows, they'll come with your own personal assistant. They'll show you where to go on a map. You don't need to pull out your phone to do everything. You can command everything from right here.
Yep.
You're telling me that's not realistic? I'm sorry. It just feels like common sense. And here's the thing, dude. They sold. This is from the article. They've already sold more than 2 million pairs.
I think they need to actually, because there's a Reuters article that we'll also put, where Meta might have to double output of the Ray-Ban glasses, because I mean they're just so hot. So yeah, look, I mean, from the article, launched their Ray-Ban branded frames in 2021 with a promise to upend the smartphone era by letting wearers take photos and videos through tiny cameras in the lenses, stream content to Meta apps, and talk to an AI assistant. And I think the most important part of what I just read is the beginning, where it says this partnership started in 2021. We're in year 5
Right.
of
This is not new.
this is not new. This is something, when you ask yourself, well, what were the R&D costs before, years ago? What were those? This. Everything right now, we paid for that. So as investors, we have to think everything that we're paying for right now with this CapEx going up, what's next? Right?
Mhm.
What are we going to see? Because this was always part of Facebook's plan. It wasn't, oh, ChatGPT launches crazy. How could we capitalize? No, 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 no. This was their plan. They collaborated with Ray-Ban for this purpose. So I think I'm excited to see what they end up doing in the long term.
Yeah, and just to bring this full circle again, the reason I read that quote off by Zuckerberg about how for the next couple of years, ads are going to be by far the most important driver of growth in our business. Absolutely. I mean, duh. Who didn't know that? That's
Yeah.
obvious. But the point is, there's potential for something else here. Yes,
Yeah.
Reality Labs is losing, what was it, $6 billion
Yeah.
in 2025?
Yeah.
Yeah, it lost $6 billion. Do I care? Absolutely not. Look, we've got every kid on the block wearing these stupid Meta. I mean, they're not, well, the old people like me would call them stupid, but these Meta AI glasses. And once the technology and the capability is there to where you can pack a ton of intelligence up here, and again, it's able to just augment your life and genuinely improve your quality of life, rather than having to pull out your phone. I mean, I hate pulling my phone out of my pocket. I hate that. I would spend $7.99 to be able to send a text from my glasses. That'd be sick.
Yeah.
So exactly what you're saying. I'm super excited for the
And
next few years, and even more, I'm excited for the next 10.
and I would like to say, even from a utility perspective, I wear glasses, right? And I mean, there's still limita I mean, there are limitations for all of us, right? In terms of what we can see. Imagine having a pair of glasses that have a camera on it, where, okay, maybe you can't see this thing, but can you zoom in and take a picture? Does the world outside become more accessible to us once we put on glasses that have more, capabilities? I don't know. I don't know that answer. I do know that there have been times where, you know, I wish I had different glasses, but maybe I don't know if I need an AI assistant attached to my face, but I think it'd be cool. I think
Well, something tells me that we're going to be able to find out in a couple of years.
yeah, and I'm looking forward to it. And I think what's more exciting than owning the glasses is owning the stock. And I think so that's all I'll say.
or the options.
Or the options.
At least yesterday.
Yeah. Well, hopefully at least tomorrow morning.
At least tomorrow morning. We'll see.
Yeah.
All right.
Yeah. All right.
Cool.
Cool.
Good conversation.
Good conversation.
Awesome.
Awesome.